You've got your eyes on what you'll call special situations stocks. It's a phrase that I haven't heard in a long time. Remind me what they are and where you find them typically.
Yeah, hi, Tyler. Thanks for having me on. So special situation stocks are stocks that have catalysts upcoming, whether it's a activist situation, a spinoff, a breakup, or a sum of the parts type story, where there's a known event that's supposed to occur over the coming quarters, and typically they've performed quite well. They also tend to be value-based, which is what we've been recommending to clients in this type of market.
And you think this kind of a choppy tape situation favors them. Then I gather what you did is you went and looked at your universe of these special situation stocks, looked at them on the technical basis of relative strength or ones that are oversold, and you found 4 names. Am I understanding your methodology correctly?
Indeed, yes. So we looked at which ones were most washed out based on an RSI basis, and then we paired through that larger list to figure out which names have maybe been oversold, where the fundamentals are actually quite good.
Mm-hmm. Give us some names.
So when we screened that, we had a few names that came to the surface: Domino's Pizza, Bosch Health, Bath and Body Works, SPX Corp, and Cannae Holdings, among others.
Let's talk about a couple of the ones that I'm natively familiar with, starting with Domino's Pizza. What makes it stand out?
So Domino's Pizza has been a growth stock, right? It's been tagged that way for a while. It has great unit growth, but it's been caught up in this growth sell-off. And if you look at it now, it trades at its 5-year average historical valuation. They have 6,500 units, an asset-light business model, and they expect to get to 8,000 stores and units over the coming years, on top of what could be another 10,000 units internationally. And so you're buying a stock that has a runway of growth over the next 3 to 5 years at its historical 5-year average multiple.
Bed Bath and Body Works was part of L Brands, right? It's not the lingerie part of it, it's the other part.
Yeah, so L Brands spun off Victoria's Secret back in August of this past year, and the RemainCo is Bath and Body Works, which has fragrances, candles, and only been a beneficiary of the pandemic. Their growth logarithm is good going forward. They only have 2% international sales. They're underpenetrated even in the U.S., and it trades at a 10p forward P multiple, 8 times EBITDA for a business that can grow EPS in the low teens over the next couple of years, we think.
And Merit Medical Systems, quick thought there.
That's where you have an activist involved, Starboard, who's been pushing for changes. They're on the board. It's a med tech device company, attractively valued, mid-cap type name, and an activist is kind of watching over the company, and I think will push through for margin expansion and better change over the coming quarters.
So we got pizza, candles, and medical devices that we highlighted there. Chris Senyek, thank you very much. We appreciate it.
Thank you.
Shepard Smith here. Thanks for watching CNBC on YouTube.